when I promoted it for any of you guys who read the advertisements related to this, I talked about that question of like, how's the market, and being, an expert in that answer. That really kind of gives a glimpse of what I'm talking about, but it's not the whole thing. So really what I wanted to do is like, you guys all go out there and on a regular basis, you're competing in the marketplace, you're dealing with clients of all different questions and everything that comes up. And you have to have like, different tools in your arsenal to be able to answer questions most efficiently and as best as possible, most effectively. So this is really a series of different tools and ways that you could analyze a market to be able to answer those questions, not only quickly, but also like providing value to that, to that potential client. Before we get into this, I have a question that I have for you. And I really want you guys to, just kind of throw your hands up and please vote on one. Just make a decision. It's not an important decision, but make a decision on where you feel we are. So the first is the recovery zone, phase 1. That's a seller's market, but like the market is building. The next is the expansion. That's phase 2. That's like, strong seller's market continuing to rise, but getting towards the peak. The third is hypersupply, which is a buyer's market. It's phase 3. It's where we've hit the peak and now we're coming down the other side. And the fourth phase is recession, which is, a buyer's market, which we're coming down the hill and it's getting to the point of, say, maximum opportunity for a buyer. So by a show of hands, who feels like we're in phase 1? I got 2 people, okay? 3 people, excuse me. Who feels like we're in phase 2? Yeah, your marketplace, like specific to your market. We feel like phase 2. Who feels like we're in phase 3? Well, that's what I'm saying. In your area. Okay, I don't see any hands for phase 3. Anybody feel like we're at phase 4? All right, so the overwhelming majority feels like we're in phase 2. That's a good thing. I feel like that just feels like you still feel like we're building, but maybe we're getting to a point where it's going to get to the top soon. Okay. And by the way, that phase 2, all of these for that matter, can stretch. So it's not like, you could be in phase 2 for 5 years. Like we don't know exactly what the timing. If we all knew what the timing was, we'd all be multimillionaires. So, I just wanted to get a pulse of the market, and it kind of gives me some insight in terms of like the rest of this presentation. So let's talk about number 1, waiting for home prices to drop. Anybody have a client that's like, I'm going to wait for prices to drop? Oh my God. Anybody? Yeah? I feel like a lot of us, I hear this question all the time. Like, I have this buyer who's on the fence who they want to buy, but they just feel like prices are too high and, yada, yada, yada. I have the best way for you to explain this to your client to get them to stop being ridiculous. So here it is, and it's going to ask you guys a question first. Since 1942, how many years have home prices dropped? That's 83 years in total. I got 2. Anybody else want to be courageous and yell out a number? 5, 6, 10. Anybody feel like it's higher than 10? Yeah, how many? 25. Anybody feel like it's higher than 25? No? Okay. 6 times. In 83 years, 6 times. If you look at, this is from Case Shiller, you're not going to get more, you're not going to get better information than this. 6 times in the US, 6 years out of 83 years, home prices went down in a year. 6. This is the visual on that. So if you look at when they actually went down, 1990, what were interest rates in 1990? Any takers? 18%? They were like some ridiculous number. So, and then it's 2007, 8, 9, 10, 11, which was the Great Recession. And by the way, everybody, this is national, so this is not specific to New Jersey, but nationally, if you look at 07 to 11, you're down 5%, 12%, 4%, 4%, 4%. Okay, so if you bought during that time, you clearly got hurt. I get it. Or you bought prior to that time, let's call it, you got hurt. But then look at what happens after that. Up 6, up 11, up 5, up 5, up 5, up 6, up 4, up 4, up 10, up 18. I mean, it's just like up. So when you have somebody that says to you, I'm waiting for prices to drop, please show them this chart. Just say, well, I mean, not for anything. Like, what is the expectation? You really think they're going to drop? Because history would tell us that, like, yeah, they might drop, but they're sure as hell not going to drop long. And if they do drop, it's followed by a crazy rise. Make sense? Number 2, am I overpaying? We get that question a lot, you know? Please.
Back to 2008, 9, and 10.
Yep.
And that time. There's a specific reason why that happened that's different from today. Can you give us 2 sound bites on saying why
Yeah.
it may not happen?
So the question was, why did that happen in 2007, 8, 9, 10, 11? And how is it different from today? Great question. Thank you for bringing it up. I mean, first of all, so people look at the mainstream media and they hear this word recession and they immediately think that it refers to all elements of the economy. That's not accurate. You could have a fiscal, recession, which we may be in right now, is the truth of it. Like, you know that in hindsight because it takes multiple quarters to know you're in recession. But I think we are in a recession right now, and that's just my own 2 cents, but we'll see. So that does not mean it's a real estate recession. What was very unique about that particular marketplace is that they were giving loans to people that shouldn't have gotten a loan. And they were doing it based off of derivatives, which was, they were selling bad paper. I'm not going to go into watch The Big Short if you really want to know what it is. But they were selling basically bad paper. They were selling bad loans. They were bundling all these terrible loans and then selling them as if they were really good loans when they bundled them together. And it was helping Wall Street hit numbers and everything else. So put that aside, that doesn't exist in today's world the way that it did. They don't allow it. There's all sorts of different compliance, that was put in place to prevent that. So real estate recession is not tied to fiscal recession. They're not one and the same. And the reality is, and this is something that you should pay attention to, is when you look at what happens during a recession, most of the time, not all the time, but most of the time, 90+% of the time, when you have a recession, the best way to improve the economy is to lower interest rates. So right now, if you were asking me, I gave you a little bit more insight than maybe I would say to a specific buyer or seller, but I'm going to tell you straight up, what are the 2 reasons why that is not indicative of where we are today? Equity in housing is completely different than it was then. If you want to do some research, what was the average equity in a home in 2007 and 8 compared to 2025, and it is night and day. I mean, I think the average equity in today's world is 40% or something like that. It's some crazy number. Back then, it was 7%. So if you had a downturn of 10%, you're underwater. If you have a downturn of 10% today, you still have equity in your house, you sell it, it's not a short sale. So that's one of the major things that played a role. Another major component that played a role is the fact that plays a role today, I should say, is there's no inventory. Where are houses coming from? Because back then, there was an oversupply. There was more houses on the market than there were buyers in the marketplace. We all know that that's not the case. It's not even remotely close to the case. So, the reality is we have, with inflation and with all the tariff issues that are going along right now, and I realize there's been a little bit of relief on that, but generally speaking, we have some challenges when it comes to supply chain. So they're not building new construction. The new construction that they're building in many cases is not first-time home buyer driven. It's more of luxury or luxury rentals. 90+% is luxury rentals. So the majority of this is not adding supply into the marketplace. There is not even a smidgen of foreclosures. It's I think it's less than 0.5%. It's some silly number. So the reality is where is the supply coming from? Like, and by the way, one other thing that you should pay attention to is something like, I forget the exact number, I'm gonna butcher this a little bit, but I'm not that far off. It's like 80+% of the marketplace, or excuse me, 80+% of homeowners today have an interest rate below 4%. So it's, and I don't remember the exact number, but trust me, it's like in that range. It's like, close to 100. Of home buyers have an interest rate below 4%. So why does that matter? You think that these people are all going to give up their rate tomorrow to jump into the marketplace? It's not going to happen. So for all of those reasons, I'm not even remotely close to scared of that happening.
And I tell people are still moving to New Jersey. Like they
Yeah.
hear on the news, all these markets that are crashing, but especially with people going back to work in New York City,
Yeah.
you can commute from here. That's going to keep the...
There's no question. New Jersey, like, listen, we have issues with affordability. We have issues with cost of living. Like, there's issues going on in New Jersey on some extent. It's not gonna, have this go, negative. Like, I'm not worried about that at all. At worst, what you might see is a slowdown. Like, you could see a quote unquote bad market could be, instead of 5% appreciation, it could be 1% appreciation, or 0. It could be a flat market. That's still appreciation, or it's still a positive. It's not negative. I mean, there's very few times in history where there's a negative. Does that give you what you need? Okay. Number 2, am I overpaying? So we hear this a lot. This right now, you guys all just signified by the majority of you said we're in phase 2. When you're in phase 2, the question is always like, all right, when are we going to hit the peak? Like, did we hit the peak? Are we about to hit the peak? You see like 2 weeks of a softening and you're like, we had the peak already. It's like, oh, not really. Like, we don't know that until later. So, the reality is like, what can you use in your arsenal to attack this particular, piece? And this is awesome. So bear with me. I'm using Montclair as the example. By the way, that's our building, and that was our building in 1900. So I thought that was a pretty cool picture. This is us right here. So anyway, I'm using Montclair. I just needed to kind of pick a town, so I picked Montclair. So what did a Montclair, New Jersey home cost in 1900? $25,000? Anybody think it's higher or lower? Lower? 5,000? Anything it's higher or lower than 5,000? Lower? I feel like I'm on The Price is Right. All right. So the answer is between $4,000 and $6,000, which, by the way, is the cost of that couch. So that was what you could buy, a home for in 1900. So the next question: what did a Montclair, New Jersey home cost in 1950? 50 years later. 30,000. Higher or lower than 30? Lower? Higher? Kind of mixed. Do we feel like it should be 30? All right. 12 to 15,000, which could get you a used Grand Marquis from 1996. I don't know. All right. What did a Montclair home cost in 2000? 600. Higher or lower than 600? Lower. All right. How much lower? 100K? 100K. In 2000? 300K. I see 300. I really do feel like I'm on The Price is Right. 250 to 300 was the average. So it could get you the new Cadillac. All right, so think about this, and this is the reason why I give it to you in this format. This is the whole chart if you're interested in it. From 1900 rather, 4,000 all the way up to today, which is about 1.1, is the median price in the marketplace. All right, so clearly nobody cares about what the price of these costs of a house cost in 1900. I understand that. And I don't expect anybody in this room to pay attention to home prices over a 100-year stretch. It's kind of irrelevant. Like, if I'm not going to be here, I don't care about what the home value is. However, and this is something that really is useful, I want you to think about this. First of all, the people that paid, this is just for the sake of it being extreme, the people that paid $6,000 or $6,500 in 1900 we're probably like, I overpaid.
Yeah.
Like, you know, and all the way through, like, you know, in 2000, when you paid, like, instead of 300,000, when you paid 350, you were like, I made a mistake. Like, you know, I don't know if this is going to make sense for me. And like, you're questioning that. And yet it's now worth $1.1 million. So why do I give you this? And this is the part that really where it all comes together is think about this. From 2000 to 2025, you're getting a 30-year mortgage. Over the course of your mortgage, your price went from $300,000 on the high side to $1.1 million. Think about that. These people are locking in on a price. Their costs are fixed. Obviously, taxes go up, but put that aside. Their mortgage costs are fixed. Now imagine that renter. That rental price every single year has gone up. It's gone up, it's gone up, it's gone up, it's gone up forever. Don't ever tell me that it makes sense to rent. Bullshit. Look at this. From $300,000 to $1.1 million over the course of a fixed, locked-in time, 30 years. I mean, that's what you're signing for when you sign a mortgage, unless you get obviously a variable rate of some sort, or an ARM or whatever you call it. Like, the reality is this is 25 years. This is not even 30 years. Home ownership is where it's at. Like, no question about it, home ownership is where it's at. If you have a buyer who's thinking about, and by the way, you can do this with any market. You don't need to use Montclair. Pick whatever market you want. The actual averages and home price averages for these marketplaces are public information. It's easy for you to find. Like, do a 5-minute search. You'll get everything you need. Like, ChatGPT will tell you this in a heartbeat. So the thing is like, when you have somebody that says, like, I don't know, I think I'm overpaying, bring this out and show it to them. You tell me, are you overpaying? Like, by the way, like, use this in conjunction with the first set that I used in terms of, 6 times in 83 years the market has went down. Like, are you overpaying? Because I don't think you are. I think you're making a great investment. Number 3, testing the home price. Who has a seller that thinks their house is worth way more than it is? We all do, because that's part of our business. So when you're testing the home price, this is not number driven. This is more of like this is like old school real estate. When I sat down with a seller, what would I use to try to get them to not make stupid decisions? That's where we're going with this. So anybody hear the pig and the python? So it just looks like a pig and a python. So, I mean, I realize that we're talking about a bell curve here, but like, let's talk about it in the context of real estate. So I would literally, you guys can do this however you want. I'm not getting political with this statement, but if you know Donald Trump's book, like the Art of the Deal. So the Art of the Deal is like literally that. It's like, kind of like showing like, how to wheel and deal in a way that like comes across as like, what you're doing. So I know that comes across in a negative way, but I don't mean it that way. So what I would do with the Art of the Deal is I would not bring this chart with me. Like, and this is kind of like the insight that I'm trying to give you on how I would use this. I would not bring this chart with me, but I would always use it, and I would like draw it on the back of a napkin. And the reason I did that is because I wanted the seller to feel like, oh, I'm just pulling this out as like something that makes sense, and I just know it cold. But like, I could just as easily have printed this out. But like, when you do it in front of them and you draw it in front of them, it's almost like you're giving them insight that they wouldn't have understood otherwise, and you're doing it off the cuff. That's the Art of the Deal. So to me, like, I would always draw this chart. So here's what I would draw. And by the way, it fluctuates a little bit from one market to the other, so don't hold me to, the actual dates, but it's pretty close. You could use this in most markets. The house comes to market, and by the way, I'm going to give you 3 different versions of this. They're all saying the same thing, but they're telling a different perspective. So the first version is the market. We come on the market day 0. How many showings do we get day 0? None. Like, this is activity on your house when you come to market. The reason you don't typically get anybody day 0 is because it hasn't even fed out to all the sites yet. Like, it takes some time to feed out. What I like to do, you guys play this how you wish, but I always like to bring a house on the market on a Tuesday, delay showings to Thursday because I wanted it to filter out to all the sites, A. B, I wanted to make sure that if the first person walks into the house on Thursday and says, I want to buy it and writes up an offer, great, we could conceivably accept that offer and still have a whole weekend full of showings before we're out of review. That to me makes a lot of sense in terms of timing because we're talking about like, a 3-day attorney review period and the seller controls that because they could say to their seller's attorney, hey, listen, don't make any decisions on this or close this out of review until Monday. Now we get a full weekend of showings. So I realize we're in a marketplace that people expect to go to the weekend and there's multiple offers in many ways. I get all that, but we may not always be in this marketplace, so you have to kind of understand how to structure this, depending on the market you're in. So let's call it the 3-day mark, showings begin, and showings shoot up immediately. And you get, everybody who's really motivated and interested is coming out in the first 7 to 14 days, fluctuates a little bit in your marketplace. During that time, that's when you're getting the most, in terms of buyers that are coming in. They're like, all right, these, the highest percentage of buyers that are in the marketplace come in during that time. I know this is very obvious. After that point, you get who? You get the people that are they're in the marketplace, but they were on vacation, or maybe they're not as motivated, or whatever have you. That's that second group from 14 to 21 days. By the time you hit the 21-day mark, Python, it's death. Why? Because when you hit that time period, all the best buyers in the marketplace have already seen it. So now who are you getting? You're getting the buyers that are new to the marketplace. A lot of the people that are new to the marketplace are not prepared to make a decision right away because they got to see more than one house most of the time. They want to just get familiarized with the market. It's death. It's just it's a problem for those sellers. So when they test the market, what are you really testing? You're testing a price between day 3 and call it 14 or 21, depending on when you decide to reposition. You're testing your opportunity with the best buyers in the marketplace. That doesn't make sense. That doesn't make sense at all. You're basically your first shot at this, the people that are most motivated and highest quality buyers, you're literally presenting to them improperly. At a bad number. And once they've given up on it, you have a problem. So let's talk about this in a little bit of a different, perspective. Let's use the buyer perspective. In that first category, what do they ask themselves? What's it going to take? What is it going to take to make this happen? That next group is well, why isn't it sold? It's been a week. I don't know. And then the third group is what's wrong with it? Between 14 and 21 days, why did nobody buy this house? There's got to be something wrong with this. And then by the time you get to that 21-day mark, they're how can I get a steal? How can I get a steal? You as a seller, Mr. and Mrs. Seller, you're giving up your leverage by testing the market with those, in those first 2 weeks. You want to test the market, test it 3 weeks from now. Let's start with the right price. Because if we start with the right price, we're not going to be giving away our leverage. We want to negotiate from a point of strength. A point of strength means that we have buyers that are fighting over your house in that first period. What's it going to take? That's where we want our buyer pool to be. By the time we get to how can I steal this, we've given up all of our leverage. We have no strength in negotiation, and ultimately we're going to settle for less. Now the third one is the behind the scenes. And this is the one that I don't think most people talk about, that sellers light up inside over this conversation. And this is why I'm saying it to you. So think about it, and this is what I say is listen, I want you to see this from the point of view of a real estate agent, because I realize we're talking about buyers and we're talking about you as a seller and we're talking about your house and all that stuff. Pause with all of that. Let me give you some insight about how this works in our industry, because there's one thing that I can tell you for certain is we are not going to change the mechanisms of our industry. There is a normal process on how things occur. And we could want to change anything we want to change, but the reality is this mechanism will hold true every single time. We can't fix it. So we have to work within this construct. So what is that mechanism? Every single agent in here who has a buyer, all of you, know that you will never get paid off of that buyer unless you get them into a house and get them a contract accepted. Now, you all have several buyers probably, and if you think about the buyers that you have, like on some level, you're gonna rate them, not as people, but you're gonna rate them based off of motivations. You have A buyer, B buyer, C buyer, D buyers, and the people that are like the best chance that you have of getting paid, they're the ones that want to buy yesterday. They're the ones that are cash buyers. They're the ones that are motivated, like beyond belief. Like the wife is pregnant, she's about to burst, and they're living in a 1-bedroom apartment and they need to move. Those people, they're the ones you bring out first. You get them into that house, the new house comes on the market, you're bringing them out immediately. Why? They represent your best chance of getting paid. By the time those people pass up on the house, now you're thinking to yourself, who else do I have that might be interested? And then you bring those B buyers. And then you go further down the list. And every single real estate agent in the world operates the exact same way because it's the principle of how am I going to get paid? How am I going to get paid? I bring my most motivated people first. So by the time you get to the D buyers, those are the people that lack motivation. They don't have the terms or the funds or the whatever to make it work. And they're basically just weak buyers that you're throwing stuff against the wall and seeing if it'll stick. Is that who you want to bank on, Mr. and Mrs. Seller? Because I don't want to bank on those people. Like, I want to work with buyers that are in the A group because they're going to get you to a closing table, they're going to pay you a premium, and they're going to do everything possible to try to make it work for you. That's a pretty compelling conversation to sit and have with a seller. And most sellers, when you start getting into the practicality of how the real estate industry works, I know it seems so obvious, but I've had this conversation 100 times with different sellers. And every time I go into the agent perspective, something like clicks in them. They're always like, oh, I didn't think about that. I wasn't thinking about like the fact that every agent operates that way and brings out their most motivated people first. That's the truth. Number 4, how's the market? We get this question all the time. I want you guys to all take your cell phone out. I'm going to give you a gift right now to answer this question. Take a picture of the next 2 slides, please. The first slide, excuse me, my clicker doesn't work that far away. The first slide is what I wrote into ChatGPT. I'm going to read it to you. It says, and by the way, I'm going to explain what I put into ChatGPT because it's 2 steps here. It says, please analyze this spreadsheet and develop an email that I could send to my clients talking about the Montclair market since the start of 2025. Please also include the macroeconomic trends that could play a role in these numbers. So then what I did is I went into the MLS. I'm not showing you how to do that because we're all on different MLSs and I don't want to hear like, oh, my MLS doesn't do it that way. So you go into the MLS. For those of you who are on Garden State, I think most of the people in the room probably are either on it or understand what it is. Garden State allows you to do something called one-liners. Anybody know what that is? Yeah? I use them all the time. Really, like if you don't know what a one-liner is, go back to your manager, go to the MLS, learn how to create one-liners. It's really great. What it allows you to do is, if you think of the MLS as a database, you have all of these fields within an MLS sheet. Those fields are all like individual different categories, like how many bedrooms, how many baths, how many whatever. So you're allowed to go into and create one-liners on the MLS that allow you to set what criteria you want to populate into a spreadsheet when you download that spreadsheet. So what I would do is I would go into the MLS and I would say, I'm going to rattle off some things that I would do. I would want to know the address. I would want to know the bedrooms and the baths and the room count. I would want to know the original list price. I'd want to know the list price. I'd want to know the sales price. I'd want to know days on market. That's pretty much it. Like just that alone will give you what you need. So if you pull those, you also want to know the status. If you're doing searches that are more than one status. I like to do sold status because to me, like it's very telling about the marketplace. But if you're doing other searches, you would want to do it in other ways. So I took that spreadsheet. All I did was, if you go into Montclair, I use this as an example, I pull every sold home, or every active home, every status home in a marketplace from a specific date, and I download it using the one-liner that I created, and then it gives me a spreadsheet. That spreadsheet is a CSV file. You take that spreadsheet and you just upload it to ChatGPT. And then you put in that prompt that I created. And it came back to me with a question. It said, can you please confirm what kind of clients you're addressing in this email? Home buyers, sellers, or investors? Also, do you want the tone of the email to be more analytical, conversational, or promotional? And I just answered quickly. I said, clients are a mixture of home sellers and buyers. I want the tone to be professional and analytical, although I added 2 N's. All right. It's very long and cumbersome what this puts together, but I'm going to give it to you so you have the whole entire document so you see what it is. It's just a Google Doc, so all you got to do is just open it. I'm going to give you a second to open it up on your phone. Cycle down through it and just, I'll give you a couple minutes here just to look at it, and then I just would love to hear your thoughts.
And you do this on the Microsoft AI?
I did this on ChatGPT. I do use Copilot. By the way, I just went to a really great class the other day, and it was talking about the different uses of various types of AI and like what you use for what. I'm probably I'm not as proficient as I'd like to be at this point because I'm still learning myself. But I am going to teach a class on that, in the next 6 months. Once I get like really good at which ones I would use for what, I will go into detail on that, at Growth Mastermind. Everybody had a chance to look this through? It's pretty good. What it does is it looks at all the data, and then the computer will literally analyze that data. It'll throw in macro trends that it knows about the marketplace, and it will give you insight that you might not even have realized inside the data set that you provided. It's pretty awesome. Now, here's the thing. You could take that data, and you don't have to use it as a newsletter or an email that you send to your clients. You could take that data and you could say, all right, this paragraph was really good. I know that this is good information. I'm going to record a 30-second or a minute-long video on just that. Just this analysis of this segment of the data pool the data set that I gave it. You have enough content in what I just sent you. If you're in Montclair, you could do this for any market, by the way. You have enough content to probably record months worth of an update, multiple segments of an update, or put out here's the other thing you could do is you could take what it provides you, and then you could say, I really like this paragraph. I'm going to copy this paragraph. I'm going to drop it back into ChatGPT or any other AI for that matter. And I want you to create Instagrammable content that has a hook and has a pull to it, whatever you want to call it, to why use this information, or why this makes sense, or why you should ask me more information about this, or whatever you want to do. It creates it instantly. This took me a total of I don't even know, 2 minutes, because I had the one-liners already set up. I mean, if it took me 2 minutes, it would be a lot. It probably took me 30 seconds. It's the easiest thing in the world, and you're going to get better market data than you respectively could ever put together yourself. And I say that because I am a stats nerd. I'm really, really good at this stuff. If I don't pat myself on the back for everything, but when it comes to analytics of market data, that's my skill set. Trust me, I couldn't put together what they put together, and they did it like this. It's such an easy tool for you to use. Number 5, days on market. So, we get a lot of people that look at days on market, and they make decisions based on days on market and all of that, buyers, sellers, what have you. I want to talk to you about rate of absorption. So rate of absorption for me is probably one of the most powerful stats you could look at to understand a marketplace. And does everybody in here know what that is? Yeah? I see the hands going half high, which means I'm going to explain it. So rate of absorption is like a snapshot of a marketplace. That's why I took a picture here. So a snapshot of a marketplace, and it looks at really a handful of things, but what it's really getting at is if no other inventory, if no other homes came on the market, how long would it take for today's demand to sell every house that's on the market? So that's what rate of absorption is. Now, like any snapshot, if you think about it, if you took a picture of me right now, and then you took a picture of me standing over there and standing over there, it's not going to tell the whole story. Like a video would tell that story, but a snapshot is going to tell little clips of that story. Snapshots in the case of rate of absorption are really interesting when you look at rate of absorption over time. You got to look at different snapshots. Otherwise, you're kind of getting like, blindly looking at a piece of the data. So let's talk about this. First of all, this is an older chart, so forget about the dates on it so much. But I want you to see like the thought process behind it. So the thought process is this. If you're like 6+ months worth of inventory, that's a buyer's market. That means that there are more buyers than there are homes. And naturally, the reverse. There are more homes than there are buyers. And what that means is if I'm a buyer and there's 20 houses on the market and I'm the only buyer, well, I have my pick of the litter, and naturally I'm going to be able to negotiate more. Whereas the reverse is also true. If there's a half a month worth of inventory, and that half a month there's 15 buyers and there's only one house on the market, well, guess what? That house is getting multiple offers and it's going to get pushed up on price. It's simple supply and demand, but you have to have like a relative understanding of what's a buyer's market, what's a seller's market. They're saying that a seller's market is below 6 months. I would say it's a little bit lower than that. It's probably like below like 4 or 5 months. I would say 4 or 5 months in today's market, is more of a balanced market, and above 6 months still is a buyer's market. So now that you understand the thresholds, let's talk about like what makes it relative. We're going to do a 3-month snapshot. You can do this in any one of your MLSs. You just go into the MLS, you go into analytics, and then you select rate of absorption. And when you click on rate of absorption, it allows you to look at it in 2 different ways. It allows you to look at it by town. It allows you to look at it by price point. For the purpose of just showing this to you, I just picked towns. I didn't pick price point. But I would strongly, strongly encourage you, if you're doing a pricing on a house, you should look at price points as well. You should run both searches, because sometimes, not always, but sometimes you have a marketplace where let's just say a house is in the $2 million range, and the marketplace in general sells like the average price point is like in the $700,000 range. Your rate of absorption in the $2 million range might be like 3 years, where the rate of absorption in the $700,000 price range might be 2 minutes. And it's like, it's not going to tell you the right story. Like, you got to really look at both. So I'm going to look at the 3-month mark. And what I did was I pulled, first of all, let me just give you kind of the criteria that I pulled. 3-month look back, never do it from today's date. I know that seems weird, but always do it from like 2 weeks back, because agents are notorious at putting their deals in late. And so if you do it from today's date, you're not going to get all the data that you should get. You always do it like 2 weeks back, and it gives a little bit of a grace period for the knuckleheads. In terms of like the 3-month look back, what I did is I pulled a few different counties, like just to kind of give it an assortment. I pulled Somerset, Morris, Essex, and Union, I believe, and Passaic. So those were the counties that I pulled. I could have pulled other counties, but quite frankly, I didn't. And the only reason why is because I wanted to make sure it was within the Garden State MLS. Like, if you're in a different MLS, you have to use your MLS, or you're not going to get the best data. So that's the purpose of why I pulled those counties. So this is insightful. By the way, one other thing. I took all of that data, and then I dropped it into ChatGPT. And I said, show me the trend lines. I just downloaded all of that data and or copied it and just dropped it into ChatGPT, and I said, tell me what trends you see in the marketplace. So this is the trends that it came out with. The fastest markets out of all of those counties, Hawthorne Borough has 0.65 months of supply. Wharton, 0.6 months. Rockaway, 0.6 months. As you skip down, you get to a little bit higher sales numbers. Denville has like 1 month worth of inventory essentially, but they have a high monthly sales. There's 16 sales in that marketplace. Some of these, you got to look at both. You got to look at how quickly are markets moving, but then you also look at how many actual sales are happening in a marketplace. Because you could have a marketplace that everything moves in 2 days, but there's one sale a month. And all right, well, that's not really telling about that marketplace. It might just be that there's no inventory. Fanwood, if you look at this, Wayne is a big one. 1.6 months, very high volume. So there's 30 sales a month that happen in Wayne, and it's less than 2 months worth of inventory. That's a market that's moving. So these towns are seller strong, they're competitive, they're great for rapid turnover. If you're working with a buyer and they're looking in one of these towns, doesn't it make sense to talk to them about this? It's hey, I just want you to know, I know you're really, focused in on Scotch Plains. Scotch Plains is a great town, but you need to realize that there's only 1.5 months worth of inventory, in that town, which means it is an extreme seller's market. And if you're looking at one of these that has a half a month, like Rockaway, 0.6 months, listen, I just want you to understand, there's no inventory here. So it is going to be competitive. If you're that buyer that's I'm not going to do multiple offers, don't look in this town. Doesn't make sense. Here's the reverse of that. Buyer leaning or slower markets. So Passaic is 5.5 months. It's the highest in the region. Roseland is 12 months, extremely slow moving. Harding is 5 months plus. Peapack is 4.79. Millburn, Short Hills, and Orange are both almost 5 months worth of inventory. Mendham, 4 months. Hallandale Borough, Passaic is 4 months. So these towns, you can make an argument that there's a buying opportunity there. If a good house comes on the market, it's going to sell for a premium. But the truth of it is if you're working, I manage, Short Hills, that's Millburn. So in that marketplace, when you think of all right, if you're doing business in that marketplace and you're sitting down with a seller and they're hearing everything's selling with multiple offers, well, hold on 1 second. Actually there's 4 months or whatever it is, almost 5 months worth of inventory in our town right now. And that's more of a balanced market. You're not going to get multiple offers on everything. You have to price it correctly to try to get more. Make sense?
Do you then go back after you have that, let's just say you pick out the town and the client's looking at?
Yep.
You need to really break down by price.
Mm-hmm.
Yeah, or bedroom size.
That's what I started with.
Yeah.
By the way, these are. So she said, well, after you get that data, you have to really break it down by price. And I completely agree. That's what I started with, which is I'm just showing you the rate of absorption for towns. You have to go back and do the search on rate of absorption for price point, because I bet you any amount of money, just is off the top of my head, if you look at Short Hills, Millburn Township, and you look at price points above 2.5, and then you look at price points under $1 million, the rate of absorption is going to be completely different. 100% agree, all day, every day, you got to do both. Make sense? Yeah. Yeah.
But they have the same stats.
Yeah. So years ago, this is just a quick aside, but years ago I remember there was, if you think about Irvington historically has been low price point, and for years Irvington had 30 plus months worth of inventory. I mean just a year's worth of inventory. You couldn't sell anything for forever. And then you looked at Bernardsville, which was the opposite for many years, where it was 2 months worth of inventory or less, and the price points were $3 million. There was a time where I remember looking at this, because I look at rate of absorption a lot, where those two markets flip-flopped, completely flip-flopped, where we saw 30 plus months worth of inventory in Bernardsville, and we saw 2 months worth of inventory in Irvington. So it does fluctuate from time to time. you have to just pay attention to this. And again, it's a snapshot, so you read into this what you will. But why I'm showing it to you is because what you're seeing right now is not the whole picture. And this is why I'm kind of building it up to your point. So if you look at high volume leaders, this is another way to look at this. Franklin Township had 39 sales last month, or on average over the last 3 months. That's a good number. Like if you're in Franklin, there's business to be had in Franklin. West Orange, the same thing. There's 33 sales in West Orange. There's a lot of opportunity in West Orange in terms of homes trading. Clifton, Wayne, Bridgewater, West Milford, Union, Hillsborough, Rockaway, Westfield. Those are all towns that have liquidity. There's a lot of homes that are selling at a given time. So that's something that, you could look at this in different ways, but that's something I would look at as well. On the county level, so the month's worth of inventory, Morris actually has the lowest inventory. That flip-flopped. Essex was the lowest by far for years. More recently, that's changed over. Passaic is Passaic is the lowest. I thought this was in order, I apologize. Passaic is the lowest with 2 months worth of inventory. Somerset 2.26, Union 2.39, Essex 2.72. Why do I point this out? All of these places are still sellers markets. All of them. There's still 2 months. The difference between 2 months and 3 months is still a seller's market. It's just the rate in which it is a seller's market. Understood? So this would be messages that you could give to a client. For sellers, in towns like Clifton, Wayne, Denville, and Westfield, homes are selling fast and often above asking. There's limited inventory, means it's a great time to list. If you're sitting down with a seller in one of these towns, that would be part of the conversation, I would say. In towns like Passaic, Milburn, Harding, you'll find more options in negotiating room. Again, be careful with that. Just take it with a grain of salt because it does depend on price point. I also am going to kind of give you a twist here, and I'm doing this intentionally because I want you to just think through this. All I did was do a 3-month look back. Well, now what I would do is I would do a 6-month. When you do a 6-month, it's very simple. In the MLS, you just switch it from a 3-month look back to a 6-month look back. When you do that, it becomes a little bit more clear. And they say okay, Montclair, tell me the trends essentially. Towns with strengthening markets. The sales are there's more sales and the inventory is getting tighter. There's more houses selling in the last 3 months in Montclair than in the 6 months prior to that. There's inventory is getting tighter in Montclair. So that's something that I, for one, didn't really realize, if I'm being honest with you. I knew that it's a great market, but I didn't realize that inventory is getting tighter there and there's more houses selling. Same thing with sales trends in Wayne. There's 5 more houses that are selling a month. Inventory is actually going backwards. Hillsborough, same thing. We're seeing a slight uptick. So, knowing these are towns with a softening. So there's less homes selling in Westfield in the last 3 months than in the 6 months prior. Inventory's gone up slightly. Denville, the exact same thing. So now it has more information. If you looked at it originally, it said Denville is a really strong market, which it is. But now it's saying, okay, inventory's ticking up a little bit and sales are actually coming down a little bit. So if you give it more data, you're going to have more of a trend line. Go ahead.
Yeah, but it's also a little bit different when you're going into the fall and you're looking at all the summer and spring months when the inventory's much higher and the buyers are higher.
Yeah,
so.
and I'm glad you brought that up because the next one is 1 year. So I would do 3-month, 6-month, 1 year. And to your point, now it eliminates seasonality. So when you eliminate seasonality, it gives you really good data. It's saying, okay, here's the look back during that time. Montclair is, the interpretation is it's strong, it's accelerating demand and tightening supply, a firm seller's market. Westfield, short-term cooling followed by resurgence, buyers returned after Q1. With all due respect, none of you are figuring this out without this. You're just not. But it's really good information to sit in front of a buyer or a seller with. In Wayne, exceptional consistency, strong demand, and efficient inventory absorption. Hillsborough, quiet in Q1, then a big jump in Q2, Q3, now clearly in growth mode. It's pretty good information. Strategic insights. Markets with strong and consistent growth. Montclair and Wayne are textbook examples of surging demand and shrinking supply. Multiple quarters of acceleration signal strong pricing power for sellers. Hillsborough took off in the last 6 months after a flat start. This may indicate buyers returning after rate stabilization or delayed seasonal activity. There goes your seasonality. Rebounding market. Westfield cooled in early 2024, but the 12-month review shows a clear rebound. Sellers who pause may want to revisit listing plans now. Isn't this a good conversation to have with a seller? Like, this is the type of thing that like you should be using AI for. This does it for you in its sleep, in 2 seconds. So when somebody asks you how's the market, or if you're talking to a buyer or seller, do a little bit of data analysis to give them stuff that they're not getting this from Zillow. They're not getting this from mass media. They don't get any of that from, that's what they come to you for. And when people say to me oh, well, why do I need a realtor? This is why. This is why. Because you could give them information to make smarter buying decisions that they could never get from any other resource. And by the way, and I say this because I know that this room is, you guys are all here and you're putting the time in to get better at your craft. Most people in our industry are not you. Most people are weak. They're not doing the research or don't know how the hell to do the research or don't have anybody that's a resource to teach them how to do it. And they're just floating through real estate that's saying I could show you a house, I could open that door for you, I could write a contract. That's not helping them. This is what you bring value to them on. Helping them understand communities, helping them understand market trends, that's what we do. People that are, that have never been through a down cycle. You've been through cycles, maybe up, but you've never seen the Great Recession. You didn't see what it's like for a house to take months to sell. And it's a very different skill set. It's the truth of it. You have a very different skill set today when houses sell in 4 minutes than when houses sell in 4 months. And the conversations you have with sellers is completely different. So I have great agents, not okay agents, people that are selling hundreds and thousands of dollars worth of real estate that come to me Mike, the house didn't sell the first weekend, what do I do? And I'm you had 30 listings last year. And they're yeah, but this is the only one that didn't sell right away. And I'm okay, deep breath. It's okay. You have a 6-month listing agreement. So you have some time. Let's figure this out. Anybody in here who's had a house that's just taking a little bit longer to sell, the conversations with the seller is different. They're different. They come to you and they're they kind of give you a hard time. Well, what are you doing for me? And what is the market? Is the market the problem? Are you the problem? Or, you get all of that. So, the question is the market the problem? And I want to give you something that I always use. And I don't think most people in here probably know to do this. So it's really useful. And it's called the status date search. So anybody who's in Maplewood with me or who's worked with me for some time, you probably have heard this before. But if you haven't, I think it's really useful. So status date search is, let's just say the listing's been on the market for 2 to 3 weeks. You run a search, and I'm using Garden State. So I run a search for, first I go to status. So obviously you're gonna go to county, you're gonna go to town, you're gonna put in all the information relative to that location. But then I'm gonna run a status search and I'm gonna check off coming soons, actives, under contract, continue to show, under contract, and sold. So the basic status. And then I'm gonna put in, like I said, the town. I'm gonna put in, generally speaking, the price point. So in this instance, I said 1.2 to 1.5 is what I put in for price points. And then I run something called status date. So status date, here's the easiest thing to think about when it comes to status date. The status date that you put in is the list date of your property. So whatever the list date of the day you put that house on the market, that's your status date. And then you run the search. Now, why do you do that? It's giving you an idea of what has happened from the point in time that you came on the market to today. 2, 3 weeks, 5 months, whatever it is. You want to see what happened during that period of time. Because if you think about it, when you come to market, what are you doing? You're evaluating the market, you're making decisions based off of what comps were on and all this other stuff. But if 14 other houses came on from then to today, like, you have to consider those as like, now those are competition that you're battling against. And you have to say, like, if we were coming to market today and with this new information that we have, what decisions would we make? Your seller needs to see that. So what I would do is I would do a status date search, and this is just an old slide, but basically there were 4 houses, there were 3 actives, 1 under contract. So since we came on the market, 3 new competitors entered the market that we weren't accounting for previously. Well, now we have to have a conversation. Are we better or worse than those competitive, homes? Are we priced competitively to those homes? Because we don't want to lose our buyer to one of these other houses. The under contract tells the story that we came to market, and for whatever reason, that buyer had the ability to buy our house, did not choose our house, chose that other house. We know that for a fact because it's in the marketplace, it's in the price point, it went under contract during the period of time that we came to market. So now you could have a conversation with them and you could say, like, listen, we lost one of our buyers to this. Now the next question you're gonna get asked, I didn't put these in the slides, but just be prepared for it, is, well, who represented them? Or was that your buyer? Or like, you're gonna get all those questions of like, now it turns from, it's not my house, it could never be my house, it can't be my price, it must be your fault. Like, and you get that a lot, so just be prepared to be able to answer that. And it's really great when you're like, well, actually, that was our listing as well. Because now it's like, oh, it wasn't the marketing plan that failed, and now they have nothing to hang their hat on except for, hey, maybe we should talk about price. So that status date search, it's a basic, simple thing, but it really does wonders when you're sitting down having a conversation. Now, I didn't go into great detail on this, but I'm just gonna give you a couple more things to think about. If you see 14 actives on this search and no under contracts, the market's the problem. And when the market's the problem, then you have to have the come to Jesus meeting with your client, and you have to say to them listen, you're motivated. You told me that you wanna retire and be with your kids down in in Texas. Are you committed to that? Because right now we're definitely having troubles with the rate of absorption. There are more houses coming on the market that are going off, and now it's not just a conversation of pricing versus our competition, but it's pricing versus our competition in a marketplace that's not trading. So we have to hit a price point that accelerates people to have a sense of urgency. And then it's like a different conversation that you're having. And sometimes when you have that conversation, they think to themselves, I'm not that motivated. I'm not that, I don't need to make that move. Okay, well that's part of this as well. Maybe now is not the right time. Depending on the situation, if it's truly not the right time. But that to me is a conversation you should be having with your sellers because you're educating them. And quite frankly, this is the easiest way to get a price drop. If you need to get a price drop, because if you're on the market for 2 to 3 weeks, like I showed you before, you need to drop your price before you hit the python. Because otherwise it's gonna kill you and it's gonna kill their equity in the home. Number 7, lower commissions. There's a lot of people out there right now that think that they heard the headlines. I had a seller the other day, I kind of cracked up over this. One of the agents called me and she said, listen, Mike, I need you to handle a conversation for me. And I was like, okay, what's up? She's like, I don't really know how to handle this because one of my sellers from 3 years ago, he got over asking price, he did very well, but he called me up, he got a notification in the mail that said that he's due money for the settlement. And he's owed money for being a seller during that time and yada, yada, yada. And so I was like, oh, great. So I called him up and had the conversation, and I said, I think he was an attorney if I remember correctly, but he was very adamant that we owed him a refund. And I said to him, no, actually, with all due respect, we don't owe you a refund. I'm not suggesting that you're not due money. You may be due money, but that money is actually done through the settlement, the class action suit, and we settled that, so we're completely free and clear of anything that's owed. We've already paid our money for that. So you have to talk to the attorneys to get money. And he was like, well, what do you mean? You're not going to give me 3% back? And I was like, no, we're not. And he was like, well, what am I due? And I was like, I don't know the exact amount, but I've heard rumors that it's about $33. And he was like, what are you talking about? And I was like, well, it's a class action suit, the attorneys get paid and, blah, 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 and all this stuff. And I said, but I'm not an attorney. I don't have any real insight on this, but I just know that we've already paid, so you're welcome to go after that settlement. And he was like, well, what do I need to do to get my $33? So I said, I'm not really a great resource for that, but I would suggest you reaching out to the people that reached out to you from the letter you received. He's like, I've done that already. And I said, well, I guess you got to wait. so that was the... Yeah, so that was the conversation back and forth. But I tell you that, it's a funny story, but I tell you that because there are people that think that commissions have radically changed. And what I did was I started to, I've used AI for a lot of this, but I wanted to actually pull from, we have been collecting data on real estate commissions across the state of New Jersey since August 1st and even before August 1st. And every so often I've been trying to give you guys some insight as to what's going on with commissions, because I want you to be well versed in what you should be charging. Ultimately, commissions are always negotiable. We understand that. And you guys as independent contractors have to decide what you want to charge for yourselves and with your clients, and I respect that. However, and this is a big however, it's really hard to understand what that looks like if you don't have any actual stats behind it, and you're certainly not getting that from anywhere else. That's not something that's being publicized because commissions are negotiable, so there is no standard in the industry. But we, like I said when we were having a conversation with Tanya before, we're the largest around in terms of, we have more agents than anybody, specifically in the state of New Jersey. We have almost 6,000 people selling real estate. We do more transactions than anybody else. There is no better data on commissions in the state than what I'm about to present to you. So let's talk about it. First of all, I love this. You can have, 3 different things, good, fast, or cheap. And in between is where the unicorn lives, because it doesn't exist. So let's talk about percentages of commissions. My question to you is, and I'm going to put it out there, and I want you to shout out a number. I'm not going to hold you to it, but for the people that charge, what percentage of the industry do you think charges less than 2.25%? Think 50%? Less than 2.25. How many of our transactions were sold at less than 2.25? She said 50%. Higher or lower than 50%? 27%? What, you been studying this? 27% of the transactions were done less than 2.25. 27%. All right, next question. What percentage rather of our commissions are sold at 2.5%? 60%? Higher or lower than 60%? We're going to get into that in a second, John. Lower? Lower than 60%? 40%, 60%, somewhere in that range. 58.7% are sold at 2.5%. And then obviously, for anybody who does math, 20% of commissions are above 2.5. So here's why I'm giving you these numbers, and we're gonna break them down a little further. So the bottom 20%, low performing agents, that's give a deal on everything they touch. High performers, top 20%, it's a simple bell curve. So it makes sense that this would fall in the way that it does. I'm not criticizing anybody, you charge whatever you want, but I do believe that there is a path to charge more, and I'm going to show you how. So let's talk about some insights about this that you would never know without actually analyzing this data. So John Barr asked me a good question. He said, is this on the buyer side or the seller side? Well, there's a difference between the two, and that's a really awesome question. So on the seller side? Okay. So high-end sellers, this is something that I found very interesting. They're booming, first of all. There's 31% increase in transactions between the $1 million and $5 million range. So there are more transactions selling above $1 million than last year by 30%, 31%. Even with the volume down, GCI remains strong. ABCR, so that's average buyer commission rate, improved by 7 basis points, suggesting better pricing power for agents in this niche market. So that's something that I thought was really interesting, because for all of the people that are like, we're actually seeing the lower price points worse on commissions, which I think is interesting. And what I found is that like people always say like, well, it's more expensive house, so I got to charge less. No. Like these are people that will pay it. Like they have the funds to pay it. Charge it. You're not doing less work, to your point. And the reality is like when you actually look at the numbers in this price point, they're doing better in terms of like the average commission rate charged. So anybody who's like thinking that it's price point driven, it's really not. Like when you get into the extremes, the 5 million plus, it's a different animal, but there's only been like a handful of transactions, so it's kind of irrelevant because there's not even enough to be like statistically significant. Luxury, 1 million to 5 million, saw fewer transactions, but bigger impact. Only, they just called it, it's the same thing. It's just, you're seeing more transactions. This is buyer side and seller side. Like that's the difference. So we're actually seeing that. Let me just make sure I'm interpreting this correctly. I wrote it, but I don't remember. Luxury saw fewer transactions, but big impact, only 9 to 10% of volume, but contributes. So what this is looking at on the buyer side and seller side, what we saw on the seller side of this or the buyer side of this is there were fewer transactions, but we actually made up for those transactions on the commission that we were charging. That was the difference here. So we've actually seen that this is a larger population of the overall GCI for all of you because of the fact that we're charging more money. Like, so even though it only makes up 9 to 10% of the volume, it actually equates to 25%, I think is the number, a quarter or more of the total GCI. That's a big difference. Like, your income every year is being dictated in many ways by that $1 million to $5 million price point and charging a full commission on it. Buyer side activity increased overall, but the cost of lower ABR, so we actually saw on the buyer side, we saw it drop a little bit, 6 basis points. It's not a crazy amount, but we saw it drop a little bit. We saw more deals happening. So agents earned slightly less per deal on average. On the seller side was the reverse. We actually saw it hold stronger, 2.46%. Now for those of you who would like say, well, that's less than 2.5%, not really. Like if you see 2.46%, yes, the absolute number is less, but it's not really less. It's because you have to account for all the things that go into dropping commission. So MLS fees, like, if those of you are still paying MLS fees, which you shouldn't be, but if you are paying MLS fees, that will take you from 2.5 less. If you give away something like, hey, like there's a problem at the closing table and I had to buy that refrigerator, that would bring you a little bit less. So any type of concession that's given for any of those reasons go into these numbers, which means that really on the seller side, we're seeing above 2.5% being charged. Go ahead.
Is this just New Jersey?
This is all New Jersey.
All New Jersey.
Yeah.
This is only Coldwell Banker.
Yeah, this is Coldwell Banker specifically. So the buyer side is kind of, the seller side is held, the buyer side has went down slightly. It suggests that sellers commanded stronger commissions. What we're seeing is like a lot of agents, the pivot, and this is something that I would strongly suggest to all of you, is when you go on a listing appointment, don't go in and ask for 6% or 5% or anything like that. Go in and say to that seller, listen, I charge 3.5%. And ultimately we're going to, I would strongly suggest that you'll be willing to entertain offers of compensation. Meaning that the buyers are going to bring you and request, commission for their buyer's agent. You don't even have to go into all this explanation. Just say we definitely want to offer out a commission, but we don't want to define the number. Now, I'm doing that for two reasons. Is one, they get to see all the information before they make a decision, which to me is why you wouldn't do that with your seller. You're actually hurting them. But the other thing that I would suggest is it also gives you the ability to charge more on the list side and not have it feel that way. And that to me is like gold. Like if you could charge 3.5% and the next person comes in and says 6%, like, it might be the exact same thing, but it sure as hell doesn't feel that way to the seller. Seller side commissions are more stable or rising. In many bands, especially above 750, ADR is actually improving, signaling listing agents may be preserving or growing their fee share better than buyer agents. I'm just gonna tell you right now, the more I speak to like the best of the best agent-wise on this topic, the more I realize it's like, where's Jerry Jacob? Jerry always says, don't say blah, blah, blah when blah will do. Like, it's the truth. The best agents in the industry are not going into, well, let me tell you about the lawsuit and this is why. Forget all that. Like, here's my buyer agency agreement. Like, it's, sign here. And, if somebody says, well, I don't understand, or says 3% there, like, yes, like, we're going to ask the seller for the 3%. Like, well, what if they don't do, what if they're not willing to pay it? Well, then you have the option to buy the house, not buy the house. We could certainly negotiate that later if we have that conversation, however you want to phrase it, but just keep it moving. Like, you don't need to go into like all these deep dive explanations about, the law, the NAR settlement, and like, you're over talking and you're costing yourself money because you're over talking. Because then you're getting them to think about all this crazy stuff that like has nothing to do with buying a home. And by the way, I deal with this every single day of my life where we, get offers and the seller's looking at the net, like, in a multiple offer. And I have never had a situation, literally never had a situation that I've been handling the multiple offer where the commission was the deciding factor. Not once. Like, I've handled multiple offers multiple times a week for my agents every single week of my life. Like, it just has not been an issue. It really hasn't. So I know in our make-believe minds, we feel like this is like a big issue and we're costing our buyers, potentially a house. Not true. You're just costing yourself money because you're looking at this with the perspective that, that people are going in less, and it's not really accurate.
You know what feels really good?
Please.
I have closing coming up day after tomorrow, and when you get the closing packet in the mail,
Yeah.
all the emails flying through right before closing, and you see, and I'm on the buy side, and you see that your commission statement is way higher than the listing agent.
Yeah. Oh, I love it.
You can do it. There's no reason
Hold on one
not
second.
to.
I'm sorry. Say this again because I love it. Say it loud.
Get your money. I'm on the buy side on a deal closing day after tomorrow, and when you get the closing docs in your email and you take a peek at the listing agent's commission statement and you see that yours is damn higher than theirs, yeah, don't think because you're a buyer agent you can't make 3% or more.
It's true. So, by the way, you know how bad it must feel as a listing agent? I have never felt this, but the reality is if you're a listing agent and you're like, oh, this person's making double what I'm making, not a good feeling. Like, not a good feeling at all. Like, just, there's no reason for it. It's just a matter of what you charge. Were you raising your hand over there? Please.
Does anybody feel that?
Hold on.
myself-
Wait.
Am I the only one who thinks that if I sell, let's say I represent a buyer and we're at the 1.1 to 1.3 range, and I have to put 2% because, don't ask me why, I put 2%.
I'm going to ask you why.
Yeah, I know. I don't know. I'm crazy. I guess because I want to get that offer, and I don't know. I'm thinking that, yeah, that 0.5% might matter. I lost 5 offers with this one buyer, so I'm thinking, okay, I'm not going to put more than 2. I'll leave that at 2. Because of course he's saying when he's going to sell the house, I'm going to have the opportunity to list as one side, one a sucker. I guess. I don't know. Am I?
Yes.
Okay. Am I the only one? That's my question.
Well, you're clearly not the only one because the statistics would say otherwise. But I will, listen, this is what I want you to think about just to kind of make it very practical. If you have $1 million buyer, let's just make it round numbers and say $1 million. Like 1% is $10,000. 0.5% is $5,000. Do you think that the difference between your offer and the next offer is separated by $5,000 and that's why you're losing? Like, if that's the reason you're losing in $1 million price point, you're losing over $5,000, then I'm gonna say it's a couple of other things that you might wanna look at. I would suggest you wanna look at the strength of your buyer's terms, because the buyer's terms make a big difference in terms of a $5,000 difference could be made up in an instant with terms. Like, I would strongly suggest you look at, besides just the think of like mortgage, think of, the cash that they're putting down, think of, all of those different things, timing, you name it. I say this respectfully, I'm not giving you a hard time. I know you come here all the time, and I know that like you're delightful to deal with. So this is not a shot at you, this is more a generalization. You're probably not doing a great job. If you're, and I don't know if this is true, but if you're separating, like you're losing by $5,000, you're probably not doing a good job of building relationships with other agents. Because I could tell you right now, when I was in the marketplace selling, I'm not losing over $5,000.
I'm not saying I lost over 5,000.
I know you're not, but I'm,
You're losing over, I put 125,000.
okay, so you're proving my point is what I'm trying to set you up on. So you're proving my point because you're basically saying that you're not losing over $5,000. So you're charging less, and the reason you're losing are other reasons. So get it out of your head that you're losing over $5,000 because you're not. Like, if my guess is your buyer's not willing to spend more money. Like, that's probably like ding, 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 the winner. Like, and to me, like, charging less money is not interrupting the sale. Like, or charging more money, it's just costing you more money, or you're making less money, I should say. So it's my 2 cents. I mean, you asked for it, so I'm gonna give it to you. But I know that everybody in here has to make buying decisions or representing decisions on how you're gonna charge and everything else. You're not going to get pushback if you charge a full fee. You very rarely, and I say this with like a lot of education behind me on this topic, in the sense that for years and years and years, for 20 years of my life, I've sat across from sellers who a third of them will sign anything you put in front of them. A third of them might ask a question, but will still sign anything you put in front of them, and a third of them need a deal on everything. That's just the law of the world. Like, you're gonna have some people that are bargain shoppers that like, they don't care what you put in front of them, they need a deal. All right, there are buyers and sellers that are like that. It's the same exact principle with listing a home as it is and this has been for the history of real estate. When you sit as a listing agent, there are listing agents, Frank Isolde, that got 6% on every single listing he took for his entire life. Like, there are other people that have never gotten 6%. The biggest difference is who asked for it, like who commanded it. Like, you're in charge of that. You just got to make a decision for yourself that I'm going to charge this, and like poof, it'll happen. So it's really that simple. Like, I know it sounds like I'm like overly simplifying. It is that simple. Any other questions about commissions?
I just have one question.
Please.
So I'm in the Bergen County area.
Yeah.
So everybody,
I'm sorry. Hold on.
everybody's giving us a commission there. Like, so we're not doing what you're doing up
Yeah.
here, which I think is the right way to do it. So we'll get, how much is the commission? 2.5, 2.25, 2. So we have to write that on our contract.
Mhm.
So are you saying it's a good idea to go back?
No. I'm going to clarify this in a second, but I appreciate it. So the question is like, everybody in Bergen County is offering out a commission, and we have to put that on our contracts because that's what they're offering. No, you do not. You know, I'm going to tell you, I'll make it really simple. Don't ask them. Don't call them up and be like, how much are you offering? Nobody's requiring you to do that. Like, we have it in our mind. This is like, we just always assume that like, hey, I need to know what they're offering so I can write it in my contract. No. The second you ask them what they're offering, immediately, the problem is like, you've now have to like have this conversation with your buyer, and you're creating all this like tension that doesn't exist if you don't ask. Like, to me, it would just be like, I have a 3%, I'm just making up numbers here, but I have a 3% buyer side commission. I'm writing in 3% because that's what I have agreed to with my client. I'm not even talking to them about commission. There's no need to talk to them about commission because the listing agent and the seller do not define my commission. The only thing they define is whether they're willing to pay for it or not. And If they're not willing to pay for it, and here's what the thought process that I would give you is, if there's multiple offers on a house, and there's 5 offers, and you're the best offer on the table, and you have a 5% net benefit to you, and it's going to cost them an extra 0.5%, like that's still a 4.5% net benefit to the seller. Like they're still going to go forward with that contract. We're just we're putting ourselves in this position where we're thinking that we need to do something because that's the way it's been done and it's not accurate. Here's trouble.
I guess you came over with the microphone. Okay, so I was told to say this. So we have a team office in Stroudsburg, Pennsylvania. We get 4% all day. I know it's a little bit different.
Buy side, list side?
Buy side.
Buy side.
Yeah. I know it's a little bit different.
What percentage was that?
4.
Oh, 4, okay.
So, and trust me, like our agents get pushback. So we have one agent that will say, oh, I saw online, I looked it up, there's a lawsuit and you're only supposed to charge 1%. She goes, my fee is 4, take it or leave it. That's it.
Yeah.
That's simple. And she's fired maybe a couple people that are kind of, like maybe I wouldn't have, but at the end of the day, everybody that she's getting is 4%.
Does she sell any houses?
Yeah.
What's your average price point?
It's definitely lower. It's like 375.
I said 400.
400-ish.
But by the way, I just want to point something out real quick. I understand the question. Oh, I'm sorry. I understand the question. It's over there, I think. I understand the question about what the average sales price is, but statistically speaking, on average sales price, the higher the average sales price, the better we've done on commission. So, did you have? No. You're good? Anybody else have questions, comments, thoughts? Just want to rant? She raised her hand for ranting. Uh-oh. No, I'm joking with you. I'm joking.
I think my last 3 sellers wanted to pay 2%, and every single one of them paid 2.5%, which
Good.
was written in the contract because they liked everything else about it.
If we ask for it, we're going to get it. It's like, that old thing, like if you believe in it or if you don't believe in it, it's true, or you think you could do it or you don't think you could do it, you're right. It's just really that simple. We just got to overly simplify and do it. I see a hand raised. Please.
I just want to encourage the buyer's agents to do that because we had a bidding war, and she actually ended up choosing the offer with the highest commission because the terms were the best, and we used it as a renegotiation tactic. We said, she's leaving too much on the money on the table between offer A and offer B. If you're willing to increase your price, and it was a lower price, they'll pay the 3%, and she did it. And it was an easy conversation, easy peasy squeezy, and she didn't leave any money on the table, seller was happy. Buyer's agent got their 3%, they're happy, closed, everybody was happy.
Thank you. Easy peasy squeezy. Go ahead. Oh, I'm so sorry. Okay. Taking people out.
So when you have a buyer that is not as strong,
Yeah.
when you have a buyer that is looking at managing their costs, and you have that conversation with them about buyer agent fees, and then you go in and the listing agent wants to negotiate the buy-side commission, you're not coming from a position of strength.
Yeah.
And I have one buyer I am dealing with that. They're looking in one specific neighborhood, and we're getting beaten out for everything. I'm redirecting him to a lower price point. He's going to be renting forever. But he did suggest, since he's somewhat knowledgeable, or opinionated at least, that if
Well
I was
stated.
willing to do it for 1.5%, that would help him get an offer accepted.
Yeah.
And, well, I kind of laughed and I said, I'm happy to refer you to an agent who will work for that. It's not me. And he backed down. But
Good for you.
it's not, well, I mean, I'm not gonna work for 1%. It's just not happening. So, sometimes you have to take extenuating circumstances into account.
I agree. All right, so I think that I'm going to come back to you in 1 second. I think that genuinely, like, this is true for everything in life. I think there's rules, and I think that there are exceptions to rules. Like, if I have somebody who really wants to be a homeowner, that, we're bouncing around and can't get a property, and like there's issues related to getting them a property. Let's say they're a VA loan, and they're not putting anything down, and they don't have money to make up differences and all that kind of stuff. And the listing agent comes back to me and says the difference between you getting this house or not getting this house is 0.5%. I'm gonna give it to the person to get the house. And I'm just being honest with you. This is like a business that we're all human, and we're talking about home ownership. This is like the difference of somebody making a home for their family, or building a nest egg for their future or whatever. I'm never getting in the way of that. But at the same time, that's the exception. That's not the rule. And very rarely are you going to even have that conversation. Did I see a hand back here? There you go.
So I've been in multiple situations this year where I have generously, happily given up a certain amount of commission because these buyers are trying to get every which way. But then I've had to have really rough conversations with people who have no idea what my worth is. I've been under contract 2 times. I've showed 50 houses to them. I've had many nighttime 10 o'clock phone calls with them explaining again and again, and I'm bargaining over 0.25% of my commission, where they will not put in a couple $1,000 at the end of the day, maybe even $1,000, and that's not the kind of buyer that I want to work with. So it's about what do you want as your client avatar? Do you want these people who are nickel and diming you because they think they can, because honestly they think that you're not worth it, or they don't think this industry is worth it? We get such a bad rap, and we work so hard for our clients, so hard. There's no easy transaction, especially right now. So I challenge everyone in this room to think about who you are, what you're bringing to the table. When you're sitting there negotiating or even thinking about negotiating, and walk away if you have to. It's not worth it.
I'm going to bring it back to a thought real quick, and thank you for that comment. I don't believe that any of this is adversarial with your client. And I know we're kind of getting into and I appreciate the point of defending yourself and your value, and I think it's a good point to be made. But I think you could do that and at the same time not make it adversarial. And what I mean by that is, I don't expect my client to come out of pocket for commission to be paid to me. I just don't. I don't expect that. I expect the seller to build that into what they're offering out. And I'm just gonna do a really good job. If I were you, I would get really well versed in explaining the reasons why it makes sense for a seller to pay us, pay the commission. And I'll say it to you in a little bit of a different way is, when we're representing a client, they don't have to buy that house. They want to buy that house. They don't have to buy that house. So as a buyer, you're never going to be in a I would say this to my buyer, you're never going to be in a position where you're forced to come out of pocket. It's my job to sit down with that listing agent and explain to them the cash flow ramifications of you having to come out of pocket for this commission versus just building it into a 30-year loan and the seller paying for it. There's no difference to the seller. They net the same amount of money in most instances. So if we are just intelligent about how we have those conversations with the listing agent, there should be no reason why this is a problem. I get it, sometimes we deal with listing agents that don't understand how to do math. But if you have that problem, go see your manager, or come see me or whoever, and structure it very quickly of how it works to the seller's benefit to offer it. They still walk away with the same net, and ultimately my buyer could build it into a 30-year mortgage versus having to come out of pocket day one. That's the difference. It's literally that simple. Having to fight with them over 0.25% or 0.5% or 1% or any of these numbers is to me, it's foreign, because they're not coming out of pocket for it. They're ultimately paying it because it's built into the purchase price. but it's not like the cash flow out of pocket expense that we make it out to be. And I just think that if we're smart about how we articulate that and we work with the other agents, and on the listing side, this is part of the reasons why I'm preaching this, is on the listing side, if any of my agents goes back to the other side and says, hey, we would have accepted your offer, or we will accept your offer, but we need you to reduce your commission by blah, 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 I'll lose my mind. I'll lose my mind, because that is not the way we negotiate this. We are all unified in this. It's our job to protect our industry. That's not our job. Our job is to net the seller as much money as possible. And you could just as easily turn around and say, instead of saying reduce your commission by 0.5%, you could say you need to increase your purchase price by 0.5%, and it's the exact same difference. Yeah. Protect our industry. Protect all of you guys. Protect one another, because otherwise we're going to go down the sinking ship. Are you telling me that we're a higher price point and you net more with my offer, even above and beyond the commission? And they're going to say, unless they're stupid, they're going to say no. And they're going to say, no, if they are stupid, then I would say, so hold on, you're going to cut your nose off to spite your face? Because you're telling me that my offer represents whatever, 2% higher to the seller, and I'm asking for another 0.5% or 1% or whatever the number is, and you're going to come back to me and you're actually going to take less, your seller's going to take less in spite of commission? And then they start stumbling, you'll get the because they don't know how to answer it. Most people are not going to get caught up in that. They'll say no, we have a higher offer when you look at the net. And if they say we have a higher offer when you look at the net, I would say, great, what purchase price do we have to be at to make it work for your seller? Forget about it, just get it away from commission. And I'll take it let me give you one more aside to this. The other pieces, not a problem. You're telling me that this, because sometimes you'll get these principled people that I'm not paying more in commission. Okay, switch it to a buyer side concession. And just say, not a problem, we'll remove that from the offer. And then just put it in, just say the seller, the buyer owes this money. They owe 4%. And when you are not willing to pay it, you're actually putting us in a position, a cash flow issue. They don't have the money to close, so we're just going to request money for closing costs. And now you just flip it to be a closing cost issue, not a commission issue. Just get it away from commission.
What if so then I did tell them that.
Yeah.
They still didn't care. They're like, oh, well, we have appraisal issues already, so.
Yeah. You're lining me up. So if you have an appraisal issue, great. Appraisals come later. So we'll deal with appraisal issues as they arise, if they arise. But let's not negotiate appraisal issues today. Let's talk about that when they actually become an issue. And by the way, I work with an awesome lender. And the lender that I work with actually has programs in place that we could make up for a shortage on appraisal. So we'll figure that out when it comes. But that's my job as the buyer's agent. Go ahead. Oh.
One of the questions I have with it.
Yeah.
Is it really the seller, or is it the seller's agent?
Ding, 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 ding. You're 100% right. The seller's agent, this comment that we had before about I love it when I make more than the listing agent because I was able to negotiate more. I agree with you, but there are a lot of listing agents that can't get out of their own way. And when they come at you with, there are two things that I would strongly recommend. When they come at you with, you can't make more money than I do. My reaction to that would be with all due respect, you negotiated with your client. I negotiated with my client. My client is the one paying this. Your seller is receiving their net. What my client's willing to pay me really has nothing to do with what your client and you have settled on for your payment. And I say that respectfully, but that's something that you guys have to figure out. This is what we figured out. Please don't interfere with my commission because for whatever reason your seller wouldn't want to pay you more or you didn't ask for more. That's between you guys. And quite frankly, if I was on the listing side of this equation, I would not interfere with your commission just like I would expect you not to interfere with mine. Respectful, but pretty direct. And then the other piece of it is ultimately I understand that you're saying that your seller won't pay me more, but I have to ask, is that coming from you or is that coming from your seller? Because if your seller is netting more with my offer than the next offer on the table, are they willing to give up my offer and pass up on my buyers strictly because of the ego factor of what you're getting paid versus what I'm getting paid? Like, is that how we want to move forward? Because I thought we work for clients. And, you know, and then just ask them, like, is this truly coming from your seller? I ask that question all the time. When you get a buyer's agent that says, we're putting on a 24-hour or you have 5 hours to respond. Did that come from your buyer? Like, well, no, hold on for a second. You're putting a term into the contract. You're now setting a term on this contract. You got to make sure that your buyer wants that term. It's the exact same principle. Like, you're creating a term in this negotiation. Did your seller dictate that term, or is that coming from you? That's how I would handle that. I don't want to belabor this point anymore. I really appreciate your guys' time today. We were going to do a networking thing, but quite frankly, we're out of time, and I think it was because we had some really good conversation today. So I do appreciate all of you guys for coming. I will try to get this video up online as quickly as I can. I do want to. There's a couple really quick, like 2 minutes. All the videos are up on YouTube, so there's that. If you want to take your phones out one more time, there's some upcoming events that you might be interested in. First and foremost, later today, if you would like to join me, I'm going to be speaking at the NARAP Blueprint Business and Wealth Conference. It starts at 3:30. It goes to 8 o'clock. I'm going to be speaking on real estate investment. I do a lot on the real estate investment front and wealth creation and all of that. This whole conference is all speakers lined up related to to building wealth through real estate investment. And they asked me to come and speak, so I'll be doing that later today. And I told them that I would give this a little push, so you're welcome to join us. Second thing is Growth Mastermind. We're doing a little bit of a road show, which I'm excited about. We're going to do a session at a country club down in Manalapan. I'm actually doing 2 Growth Masterminds in June because I don't have anything better to do with my life. So I'm really excited. No, in all honesty, we're going to do 2, and they're going to be 2 separate topics. We will do a Growth Mastermind here in Madison, which I'll put up it's June 11th. I have 2 amazing speakers and unbelievable leaders within my organization, Amy Patternite and Ben Garrison, that are going to be speaking. They're a phenomenal team, and they're going to be talking about like their partnership, and they do a tremendous amount of business, and it's really their team name is The Good Life, and I think that they embody that. So they're going to be coming and speaking, and I'm excited to highlight them and kind of what they've done to work through as 2 top producing agents how to become partners with one another and do it effectively, and then ultimately build a team. So we're going to be going into that. The session down in Manalapan, we have a bunch of different panels. So if you can't make it down to Manalapan for whatever reason, I understand. The truth is we're going to be filming those as well, so you can look at those on the YouTube channel. And then finally, I'm actually going to be speaking on June 12th at Level Up, which is like a DEI conference. That's the tri-state area is going to be held. Where's my Uncle Billy? I think he might have walked out of here. But Bill Flagg is a founder of this, and he's a big part of putting this together. It's pretty great. It's talking about how to do businesses across cultures and with all different groups of people and the challenges that come up and and how to overcome them. So I'll be speaking at that as well. We're not going to do Mastermind today, so I appreciate your guys' time as always. Wait. One last thing. Come on, Chris. Chris had the great idea, and I wanted to run with this because, sorry, hold on. I'm just going to throw. Chris had the great idea. We obviously filmed these. We had Tanya here today. I wanted everybody to sit up front. I really appreciate those that sit up front. So anybody who did that got a free ticket. We'll call out the number, break out your tickets. You want to do it?
Can't see. Oh, no. Oh, that's upside down.
I set you up.
09088060.
Sue? This is what happened, front and center. Congratulations. Just honestly, just reach out to me and I'll line up. We'll pay for a listing concierge.